Hi, today I'm going to teach you more about decentralized finance, its impact on traditional finance, and what the differences between the two are. And I think this is a very important topic to talk about, and it's very relevant because decentralized finance has really grown and really evolved a lot in the past few years and will probably continue to do so for the foreseeable future. And also, knowing a bit more about decentralized finance is definitely going to come in handy as you're making your portfolio for week two. And in this video, I will be referring to decentralized finance as DeFi mostly for time-saving purposes. So let's start with the definition. What exactly is decentralized finance? And DeFi is essentially a digital ecosystem that enables its users to engage in purchasing, exchanging, and sending digital financial assets without really having to rely on banks, brokerages, and exchanges as intermediaries. Think about using a decentralized exchange to exchange one cryptocurrency for another one without really having a lot of scrutiny. Think about using a platform or protocol to borrow money from and to each other without having to deal with too much paperwork, or, for example, prediction markets where you as a user can essentially bet on the outcome of real world events. Those are all ways that DeFi is and can be used. And as you can imagine, this new technology has had a major impact on traditional finance. Think about borrowing and lending money, for example. Traditional banking has always been a hurdle in the sense that they control how much money you can borrow based on your credit history, your credit scores, your employment history, your income. And DeFi works on a peer-to-peer based model where certain platforms or protocols enable users to borrow and lend money from and to each other through what they call smart contracts. And those are contracts where a lot of details are already determined in advance. Think about collateral requirements, think about interest rates. So it's very similar and very equal for everyone. And unlike traditional banks, or unlike with traditional banks, the approval of these loans takes place almost immediately, which also makes them very, very fast. DeFi has also really changed how people save or can save and can earn a yield on their money. Savings accounts in traditional banks might get you what, 1% interest a year. In DeFi, what you can do is something called staking, which is pledging your money to a protocol, to a decentralized protocol, and then you receive an interest in return for that. That's much higher than the return you would receive from a traditional bank. What you can also do is yield farming, which is essentially lending out your cryptocurrency assets, also in return for some interest. This, of course, carries a lot of risk as you are exposed to, a volatile market, which obviously wouldn't happen in a traditional finance setting, but you can earn more money than in a traditional finance setting. And trading and investing has also really, really changed, by the introduction of decentralized exchanges. In these exchanges, you can trade digital assets without having to rely on intermediaries. Think about, for example, in a traditional exchange, you have to pay fees and you're constrained by their opening hours. And in a decentralized exchange, that's not the case. They're open 24/7. The fees are lower than in centralized exchanges, and the access to those exchanges is usually also a lot easier. So what are the main differences, the key differences between DeFi and traditional finance? I would say one of the most defining differences is the lack of intermediaries compared to traditional finance. Traditional banking has commercial banks, private banks, central banks that all facilitate transactions and keep record of those transactions. And yeah, in DeFi, blockchain technology is actually used to circumvent all these intermediaries. Transparency is another one. Most processes in traditional banking and traditional finance are very opaque. You could say you as a customer don't really know what's going on. But in DeFi, all transactions are open and visible to anyone who wants to verify them, because it's built on a public blockchain network. And those public blockchain networks also make DeFi a lot more accessible than traditional finance because there are no geographical limitations, credit checks, minimum account balance requirements to participate. So especially if you If you live in a region that's not really within the scope of a bank, it's very attractive because all you need is an internet connection. And as I've touched on already a little bit, what are really the risks and the benefits that are associated with DeFi. And the benefits are the following. I've already touched on them. Speed. Receiving a loan goes much quicker than in the traditional finance system. Accessibility. You only need an internet connection, so it's very accessible to people who don't fall within the scope of a bank. It's very transparent. All transactions are open and visible to the public, and it's very cost effective. The fees on decentralized exchanges are generally much lower than what they are on centralized exchanges. But there are also risks, of course. You have security risks. DeFi platforms are constantly under attack of cyber criminals, and smart contracts are also not exactly watertight. There could be some issues in the code that can pose some real threats. And if you lose your money, it's generally not insured unless you've done so yourself. Volatility is another issue. In DeFi, DeFi is heavily reliant on highly volatile cryptocurrencies that pose as the collateral of loans. Of course, in traditional finance, that's not the case. And liquidity is very, very unpredictable in DeFi, which can cause some execution issues. And also in traditional finance, that's much less of a worry. So yeah, DeFi and traditional finance, they both come with their own benefits and risks. I would say if you're more risk seeking, then DeFi might really be something for you to consider. Otherwise, I would just stick to traditional finance for the time being. So on that advice, I would like to end. And yeah, thank you for watching, and see you next week. Bye.